Good afternoon, everyone. Mario Quintero here with the One Stop Shop for our first weekly happy hour live podcast on what you need to know about mortgages and real estate. First, I want to wish everyone a happy new year. I hope you had a great holiday 2-week period of time between Christmas and New Year's, and that you and your families have been able to stay healthy and that you have a prosperous and many blessings this year. I had a 3 to 5 2-week vacation, and what that means is that I gained 3 to 5 pounds. I ate a lot, I rested a lot, and came back Monday ready to, with the batteries recharged and ready to serve our clients for the coming few months as we head into a new year. So I want to start off today that the One Stop Shop has done some research this week on where interest rates are going. And since we now have a final on the 2020 election with the Democrats winning all 3 houses, the Congress, the Senate, and the White House, one of the things that will probably occur is people want to know what's going to happen with the interest rates with all these political changes. And what we do know is that a result of this type of government that we're going to have moving forward in 2021 is that spending is probably going to increase. It's going to increase in many ways, in stimulus, and they probably want to get a quick infrastructure bill passed, and because they have all 3 branches of government, they will probably get these things through. And what does increased spending at the federal level mean to interest rates? And what that means is that the rates will probably start inching up, and we already saw that today as we had a little freeze on pricing this afternoon because they started to trickle up a little bit, and we already had our first repricing of the year. And with that, there could also come some inflation, which will also create an upward movement in the rates. We're not talking huge increases, but we're looking at the potential for slight increases that could take the rates back over 3%. So just be aware of that. And if you've been on the fence regarding getting pre-qualified or doing your refinance, waiting for the rates to drop, they're probably not going to drop any more than what they were already. And now is a good time to consider what your plans are moving forward. If you have any questions regarding what you should do or what you think you want to do and you would like a free consultation, feel free to give me a call here at the office at 305-598-1600 or on my cell, 305-588-0451. So one of the things I want to inform you of is that when you get home at night or when you're watching the financial news and they start reporting on the interest rates, I want you to know that the media is usually about a day, day and a half behind schedule when it comes to giving you information on the rates. Okay, so just be aware that when you hear something on the news regarding short-term rates or long-term rates, they're probably, the train has already left the station. So be aware of that, and if you have any questions on that, feel free to give me a call. So there's 2 pieces of analytical software that I'd like to offer to anyone that would like me to run a scenario for them. And the first one is the cost of waiting to refinance. And this is an analytical tool that we have available for those people that have been waiting for the last 6 to 9 months, what it's going to cost you to wait another 6 to 9 months, or what it already cost you to not have made the decision to refinance when you could have. So the software is called Cost of Waiting to Refinance, and there's no charge to you. We will need some information from you to input into our system. We'll run you a report and we'll email it to you. So it's that easy. The next report is for those people that are renting. And that report basically is called Rent versus Owning a Home. And it shows you how much money you are throwing away by continuing to rent versus making the move to look at owning a home. And it does an analysis of the monies you use to rent versus the monies you use to pay off a mortgage, and the savings that you will have long term, number one, and the appreciation that you will have on the equity of that home long term and short term. So if you're interested in finding out about either of these two situations, give me a call, 305-598-1600, or my cell phone, 305-588-0451. I'll be more than happy to run those scenarios for you, and we do not charge for that, okay? The last thing I want to talk about is if you do make a decision to refinance or to get pre-qualified to own a home, our process is very simple, and I wanted to speak to you about the 3 key ingredients that you would need to have in order to be able to qualify for a mortgage in today's environment. So the first one is obviously your credit score. Your FICO score is going to be very important, and the higher that your FICO score is, over 640, the easier it will be to secure the best rate. So we start off at a base of 640, and from there it goes up. The next break point is 680, the next break point is 720, and then from there, from 750 up is a whole different ballgame. So those are the different break points, and one of the things you need to know is that those credit score tracking systems that are on your phone from your bank or from whatever institution you sign up with, they're not 100% accurate. And you know, the credit reports that we run are designed for mortgage lending nationwide, and they're probably the most accurate reports that anyone can run for you or for understanding what your credit is. And that's part of the qualifying process that we use, is that we need to run your credit, okay? Number 2 is you need 2 years of continuous income, and it could be different jobs, but as long as we have 2 years tax returns and a recent W-2, that is very important to the pre-qualification process, because we need to know, based on your individual gross or the gross income of a couple, what it is that you're going to be able to qualify for. And that's the second piece of the puzzle after we look at your credit. And then the last one is, how much liquid cash do you have available? Because that lets us determine what is the minimum down payment that you can qualify for in the mortgage that we would be looking to put you in. It would also determine how much house you could buy. When we put all these 3 things together, the credit, the income, and also the available cash, it gives us an idea exactly how high you could go for the purchase price and where you can afford to go on the purchase price, because there are factors and variables that we need to analyze in order to properly consult you, so that you can then go out and start looking for that home. So once again, the process is really simple. You can do an online application, we can do an application over the phone, or we can meet in person face to face. We fill out what is called a 1003, which is an application. We fill out the approval to run your credit. We ask you for a few documents that you could bring in and we can copy, or you can upload to our easy online application system. And within 24 to 48 hours, we'll let you know exactly what your situation is and how we can move forward in assisting you with the purchase of your home. So if you have any questions today on any of the things that I talked about, feel free to give me a call here at the One Stop Shop, Mario Quintero. This show is produced by marioshomenews.com. And if you haven't been to my website, marioshomenews.com, there is a tremendous amount of information, both written and on video, that you can watch so that you can learn more about home ownership and the world of financing. So I'd like to wish you all a great new year coming up. Many blessings, a lot of health and prosperity. And if you have any questions at any time, the number's on the board, 305-598-1600. Thank you, and make it a great weekend. Bye-bye.